We are on to a new chapter, chapter 3. So this is the final chapter before we have our midterm exam. Midterm exam is going to be on, let's see, March 7th, which is 2 weeks from today. So we're going to get through chapter 3 here and probably have some time to also do some review before our midterm exam. Yeah.
That's all open book, right?
You have 1 page of notes.
Okay.
Yeah, you can use 1 page of notes front and back. Okay, so it's closed book. And it will be during class time. Okay, so come in here. Does everybody have a laptop? I know you guys have, so Kathy, you've got one? Okay, so you'll want to bring your laptop with you. Unfortunately, since we're not in a computer lab, it is given on Blackboard, so.
Yeah, I hate doing it on the laptop because it's just wasting so much time when you try to trying to do the decimal places.
Okay, well, it's mostly, so the midterm exam is going to be mostly true, false, and multiple choice. So you'll also be able to use a piece of scratch paper. So if you're doing calculations, you can do them on your scratch paper. So you don't have to do that. So you won't have a whole lot of that.
Trial and error on there. I just hate it. Just wasting so much time.
Yeah, so there's not a whole lot of that. So it's just mostly, check the box and that sort of thing. And we'll as we get closer, especially like the Thursday before, I'll go into more detail about what to expect on the exam. There is let me make sure it's open. There's a study guide. I know that's hard for you guys out there to see. It might be kind of small. There we go. The review folder. I do still, no, that's not up for you guys. I'll put a different one up. That was from a different semester. So what you can see right now is this list of topics that will be covered on the midterm exam. So when you're putting your note sheet together, this is a good, a good guide for you. Okay, and obviously there's some items on here that we haven't discussed yet. The Form 941, which we're going to cover in this chapter, Social Security, OASDI, HI. Some of these most of these we have covered. Let's see. The additional Medicare tax we've not covered yet. The Form 941 we've not covered yet. FICA tax we've not covered yet. But pretty much everything else we've covered in chapters 1 and 2. So most of those items should be familiar to you, even if you were to look at it and start studying now. And I'm sorry out there, I know that's kind of small to see, but it's on Blackboard, so you guys have access to it and can see it as well. Okay, so just kind of giving you a little bit of a preview there of what is, yeah.
What about the formulas about the methods?
I'm sorry?
What about the formulas about the methods?
The formulas, like trying to think off the top of my head. Oh, so like the different methods and things like that. So that might be something that you'll want to put on your note sheet as well. So that kind of stuff where it's difficult to remember it, or if we're going to go through some tax rates in this chapter, as well as some wage base information. So those are things that, those specifics, those are great things to put on your note sheet so that, because I know it's hard to.
Front and back or just front?
Front and back. Yep. And you can, however little you can write it, whatever you can fit on there is fine with me. I wouldn't be able to see it, but if it were me, but you guys are younger than I am, so. Let's see here.
Can I print that instead of writing?
Can you, I'm sorry?
Print the notes?
Yes, if you want to type it out and print it, you can do that as well, as long as it's something that you produced, okay? Part of the idea with the notes is it forces you to go through the material, and it forces all of that information to go through your brain and out your hand or out your, somehow. And it's very helpful for a study technique as well, okay? So, and like I said, we'll get into more specifics as we get closer here. And I see we've got a couple others that have joined us, so let me make sure I've got you guys down. And look at you. That's you. Okay. This is a little bit, let's see here. I lost my. Okay, so without further ado, we will get started on chapter 3. And in chapter 3, we are going to be talking about Social Security taxes. So many of you are maybe already familiar with Social Security taxes. If you've received wages before, you'll be very familiar with FICA. Which I'll go through. There are several different acronyms that are associated with Social Security and Medicare taxes, and we'll go through what those acronyms are. Social Security and Medicare taxes together are oftentimes termed FICA, and if you've received a paycheck and you looked at the pay stub, you'll look at that and say, who is FICA and why are they taking all my money? It can be a pretty big chunk of tax for most people. In fact, most individuals, especially those who are employed in this country, are paying more in FICA taxes than they are in income taxes. It can be a pretty sizable chunk. So this is what we're covering in this chapter. We have to kind of set up the details about what FICA taxes are, who is subject to FICA taxes, Social Security taxes, who isn't subject to Social Security taxes, what type of work is subject to Social Security taxes, what type of income is subject to it, what type of income is not subject to that particular tax. So we've got to do a little bit of background first before we get into the specifics of calculating. My hope is that we will get through the first 3 bullet points today. So we'll give you that information about what Social Security taxes are, what they go to fund, why is it, if they're taking your money, what are they using it for? And then kind of get into how it is calculated. We're also going to talk about what types of income then are subject to those Social Security taxes, because not every type of income is subject to Social Security taxes. There are certain types of income that are received that don't have to pay Social Security taxes on that. Then we're going to talk about those tax rates and what we call a wage base for Social Security taxes. What we mean by a wage base is what income, how much income is subject to that Social Security tax. Whenever you're being taxed, there are 2 factors that are included in the calculation of the amount of tax that you're going to pay. One is the tax rate. What is the tax rate? And then the second one is, well, what is being taxed? And that's referred to as the tax base, that income that is subject to tax. And that is true regardless of the type of tax that we're talking about. In this case, like I said, we're talking about Social Security and Medicare tax, but that is true of income taxes, that is true of sales taxes, that is true of property taxes. All those types of taxes, we've got the rate, and then we've got the base. So, and we're going to discuss what that wage base is and the wage rate. Now you can see, I talked about FICA here. There's another type of tax that we're going to talk about called FICA taxes. The FICA taxes and the FICA taxes are basically the same, but they're applied to different individuals. I'll get more into that when we have our discussion on that, but we're going to be covering both of those. They're both Social Security and Medicare taxes. Within both of those categories are Social Security and Medicare taxes. But FICA taxes are applied to self-employed individuals. FICA taxes are applied to employees, employers. Okay. Then so the employer has collected these Social Security and Medicare taxes, withheld them from your paycheck. What happens at that point? You don't just get to keep it, right? It doesn't belong to the employer. It goes to the federal government and gets deposited. So there is a schedule for those deposits, when they need to be, those amounts need to be deposited. And there is a schedule for reporting those amounts. And they're on two separate schedules. Okay, so we have the deposit of the funds, and then we have the reporting of the funds. If you think about your own tax return, which it's tax season, if you have a tax return that you have to file, usually that's done about this time of year, due generally around April 15th. I think it's the 18th this year. 17th or 18th, sometimes they have to extend it. But if you think about your own taxes, so if you're an employee, your employer takes your income taxes out of your paycheck, sends it off somewhere. That is the payment of those taxes. But when you report the income, that's on your Form 1040, which is done every year about this time. So you may or may not have to send the IRS more money. Essentially, that Form 1040 is a reconciliation. Here's the amount of tax that I paid. Here's the amount of tax that I owe. I'm going to reconcile that on the Form 1040. If I paid too much, I'm going to get some back. If I didn't pay enough, I'm going to have to pay more. So the same thing is true of these FICA taxes, Social Security taxes, payroll taxes. There are a lot of different terms for these, by the way, and I tend to interchange them. So if I'm saying something, an acronym, and you're like, hey, wait a minute, what is that? Stop me so that I can explain it. But the same is true for these taxes. They are collected by employers, or if you're a self-employed individual, you have responsibility for collecting that on your own behalf, and then they're sent off to the IRS. But we also have to do this reconciliation. Did we pay the right amount? Did we pay too much? Did we not pay enough? So we have a reporting requirement that also has to be met with regard to these taxes. It's not once a year, though, it's 4 times a year. So the schedule for payment and the schedule for reporting are 2 different schedules. Okay, so we're going to be going through what those schedules are. The form that is used to report those taxes is called a Form 941. Like the Form 1040 that individuals use to prepare their own taxes and file their own taxes, this Form 941, and the IRS loves these numbers for the forms. They love the letters. When you start working in tax and payroll and in tax, it becomes kind of second nature to say these. So again, if I say a form number or letter and you're like, hey, what is that? Please stop me so that I can explain it, because like I said, you get to the point where they just kind of rattle off. But this Form 941 kind of acts like that Form 1040 in that it's where we reconcile what we owe with what we've paid. Okay, so those are the topics that we're going to be talking about in this chapter, but this is only going to pertain to Social Security and Medicare taxes. We're not talking about income tax withholding yet. Okay, that will be for chapter 4 after the midterm. Okay, any questions about what we're going to be covering in this chapter? Yeah.
So the 941 is the payment, and the quarterly federal tax return will be the document that let us know if we pay too much or not.
No, so the 941 is the reporting form. It's not actually where the payment goes. The payment is going to be separate from the 941 in most cases, in the vast majority of cases. There are some situations where you would make the payment along with the 941. But the 941 is for reporting. how much is owed, right? The payment should have already been made. All the payments for what's being reported on that 941 should have already been made per the deposit schedule. Okay? Yep. And that'll become more clear as we get into it. You will find though that sometimes the deposit schedules vary depending upon how much is owed. So the IRS is just like everybody else. The more money that somebody owes them, the faster they want that money, right? If you lend somebody $10 and they take a month to pay you back, you might not be quite so anxious about getting that $10, right? But if you lend somebody $1,000, you probably want that back a little bit faster, right? So the IRS is the same. The more a company owes the IRS in payroll taxes, the faster they have to pay it to the IRS. The less they owe, the slower they get to pay it. They get more time to pay it. Okay, so that's what those schedules, and we'll go through those when we get.
Is that the one reported in the Iowa workforce? Is it?
That's a separate one. So Iowa workforce, the unemployment, that's going to be chapter 5. So Iowa workforce, yeah, that's a whole separate type of tax, unemployment tax, and we are going to talk about that, but that's going to be for chapter 5. So the 3 main types of taxes that we're talking about though are Social Security. Well, I put Social Security and Medicare tax together. FICA taxes, income taxes, which are paid to both the federal government and the state. We're going to talk about that in chapter 4, and unemployment taxes, which are paid to the federal government as well. And that is chapter 5. Okay, so we got kind of 3 different categories of taxes that have to be, that the payroll department is responsible for calculating and remitting to the appropriate agency. Okay. Okay, so FICA, again, FICA, let me see here. So FICA is comprised of 2 different taxes. We've got Social Security, I'm going to abbreviate these, and we've got Medicare taxes. Both of those are FICA taxes. FICA stands for Federal Insurance Contributions Act. And your book goes through that whole acronym and information about that act. Again, just like the FLSA, this was passed in the 30s, and it was in response to the economic conditions of the time. Do you guys know what Social Security taxes what they pay for? Yes, no? And Andrew's nodding his head, so maybe you can tell us what does.
For the first chapter, Social Security income, collect to pay if somebody is going to retreat, man, I don't know to explain.
Sure, the language part. So retirement is one. So retirement benefits.
Yeah.
But it's not just retirement benefits.
Disability
benefits.
How do you call when your family is like an orphan? Like there's no father or mother who died?
Survivors.
Survivors
Benefits, right.
I didn't know that was the name.
Survivors? Oh, yeah. So survivors benefits. This is so all of those Social Security taxes that are collected go to pay for these benefits for recipients. Now, for most of our lives, we're not receiving these benefits, but we're paying into it, right? When we work, we pay into it. And then hopefully, fingers crossed, when we retire, we're going to receive those benefits. And if we need disability benefits, hopefully we receive those benefits. And, God forbid, our spouse dies and we have dependent children, we would receive some survivor's benefits as well. So the money is taken out of paychecks, and then it goes to pay for these types of benefits. So that's Social Security. Medicare, which I often will abbreviate it MC. Your book uses the abbreviation HI. HI stands for health insurance. Okay, Medicare is a type of health insurance. So these are health benefits. There are different types of Medicare. There are different classifications. There's Medicare A, there's Medicare B, there's Medicare D. I think there's a C as well. They go for different types. They represent different types of health benefits. The main one, what we pay for with our taxes is generally Medicare A. Now these, and the Medicare A is for like hospitalization. Now this only applies to either individuals who are in retirement or who have some sort of disability, who qualify for these disability benefits. So the rest of us who are of working age and who don't have a disability, we've got to get our health benefits, our health insurance from somewhere else, right? But again, so this is for 65 and older, and those who are disabled, who qualify as permanently disabled. You have to go through a whole rigmarole with Social Security in order to get those benefits. But that's what, so this tax that's collected again through employment, through our wages, then goes to pay for these benefits. Again, only for individuals who are 65 and older or those who are disabled. Qualify. Yeah.
What about Medicaid?
Medicaid is a separate program. So Medicaid, and oftentimes it's really easy to get those two confused, isn't it? Because they sound pretty similar. Medicaid is a separate program. It's not paid through FICA taxes. It's paid through income taxes. And that is for individuals. It provides health benefits for individuals who are economically disadvantaged, mostly for children as well, who can't, don't have health insurance through another avenue, not through employment, but there are very strict income guidelines for Medicaid. But Medicaid, like I said, Medicaid is not paid for through FICA taxes. Okay, these are the only things that are paid through FICA taxes. And again, that's collected through our paychecks. Now, not every type of income is subject to FICA taxes. Only what we call earned income is subject to FICA taxes. What is earned income? Earned income means through your efforts, you are earning that income, as opposed to what's called passive income. Income from investments, interest income, dividend income, income that you receive from some business that you've just given. Your money essentially is earning the income when we talk about passive income. Your money is what's doing the work to earn that income. You're not doing anything. You're not lifting a finger. You've just given your money to some other entity and they're hopefully increasing the amount, right? That's not earned income. Earned income means through my efforts, I have worked to obtain that income. That is earned income. Only earned income is subject to FICA taxes, Social Security and Medicare taxes. So if you've got money on deposit at a bank and you receive interest from that money, that's not earned income. You didn't do anything. All you did was put money on deposit at the bank. The bank is paying you interest in exchange for borrowing your money from you, right? So you didn't, there's no work involved for you other than making a deposit, right? So that money is not subject to Social Security or Medicare taxes. So only that income from employment or from self-employment. So individuals who work for themselves also have to pay Social Security and Medicare taxes. Okay. So we have to define, and we're kind of getting, we've already gone through a lot of this, what an employee is as opposed to what a contractor is. So under FICA taxes, and like I said, we're going to talk about FICA taxes. FICA taxes are also Social Security and Medicare taxes, but they apply to self-employed individuals. But only those individuals who are considered to be employees are subject to FICA taxes if the service that the individual renders is considered to be employment. Okay. So not how do I put this? So not every type of income that somebody earns, even from their employer, is necessarily subject to FICA tax. Because if there's some other type of income that they're receiving from their employer that's not related to their employment, their work, then that would not be subject to FICA taxes. 99% of the time, any income that an employee receives is going to be from an employer is going to be subject to FICA taxes. Okay, so FICA taxes as opposed to FICA taxes. Again, FICA taxes cover the same thing. FICA taxes go towards part of it is Social Security tax, part of it is Medicare tax. But FICA taxes are for individuals who are self-employed. That's where the SE comes from, self-employed. Okay, Contributions Act, same thing, right? But this again is only for individuals who are self-employed. And you'll see that the tax rates for the two, even though the amounts are going toward the same thing, the tax rate that the employee or self-employed individual actually pays is different. Okay. So we're gonna talk about what those tax rates are as well. So who is considered to be an employee? Individual, even a trust or an estate. So if an individual is an employee of another individual, so I'm an employee and I work for somebody who owns their own business, that's still considered to be employment and is subject to FICA taxes. If I do work for a trust or an estate, which that happens, or if I work for a partnership, or if I work for a corporation, doesn't really matter who I work for. What matters is, am I performing work in exchange for that income? If I am, then it's going to be subject to these FICA taxes. Doesn't matter if you're a citizen, non-citizen, all earned income is subject to those FICA taxes. Now, there are some occupations that even if they don't meet the definition of, even if the work doesn't meet the definition of employment, they're still automatically covered. They're still automatically subject to FICA. Life insurance salespeople, and these are very specific. Traveling salespeople, agent and commission drivers of food and beverage, or handling laundry or dry cleaning. Very specific, isn't it? Or individuals who work at home on assembling products and then ship them back out to the employer, they're automatically covered by FICA. Okay. Couple other specific instances that we might want to talk about. So government employees, back in the olden days, there were certain federal government employees that were not covered by FICA. They didn't have to pay those taxes. Pretty much everybody now, it was a long time ago when that was the case, so pretty much everybody working for the federal government now is subject to FICA. Patriots, so these are individuals who are not U.S. citizens working in the U.S. They may be exempt from FICA taxes if there's a treaty in place with their home country. So there are certain, that's what they say here, over 20 countries, they have a specific treaty in place. Expatriates, Americans that are working overseas, may or may not be subject to FICA depending upon if it's a foreign company and they're paying foreign social security taxes, because lots of other countries have their own social security taxes. Then they may, if they're subject to those foreign social security taxes, that's what they would pay. Certain family employees, if the individual is under the age of 18. Employees in family businesses under the age of 18 are not subject to FICA taxes. Household employees, these are nannies, chauffeurs, cooks, those types of individuals. If they make wages of $2,400 or more per year from that one employer, then they are subject to FICA taxes. If they make less than that, then they are not subject to FICA taxes. There are some other exemptions from it. And there are lots of specific exemptions, but we're not going to go through all of the different scenarios. Okay, so independent contractor, we've already gone through this. I'm not going to talk about this too much. These are individuals, though, who are they're not employees. They're contract work. Again, they're not going to be paying FICA taxes. They're going to be paying FICA taxes. Different tax rate for those taxes. Okay. All right. So that's who is subject to FICA taxes. Now, what types of income are subject to FICA taxes? I've already gone through a lot of this. Wages and salaries are subject to FICA taxes. That's earned income. Bonuses and commissions, again, those are considered to be earned income. Cash value of meals and lodging, if it's for the employee's convenience. You're going to see this in every single chapter. It matters. It is taxable income. The value of it is taxable if it's for the employee's convenience. If it's for the employer's convenience, it's not taxable. Okay? So, but if it's for the employee's convenience, then yeah, go ahead.
I want to ask you something. Sometimes independent contractor sometimes work in some company. So he's going to pay FICA.
Well, if they work, so are you talking about somebody who is they have like two jobs?
No, it's independent contractor, and then he work in somebody else, like a part-time, so he's supposed to pay FICA too.
So if they work for, and that's very possible. Think about, so you've got a business with a bunch of employees, but you also hire a cleaning crew or somebody to come in and clean the offices, and they have their own business. They're earning income from that company, but because of the nature of their work, remember, it goes back to control, behavioral control, financial control. Because of the nature of how they do their work, they are independent contractors. So in that case, all those employees of the company would be subject to FICA taxes, but the cleaning crew, those individuals would be subject to FICA taxes if they have their own business, even though the money is coming from the same place, right? So it all comes down to, again, who has control. Does that answer your question? Okay. So it's very possible for employers, companies to pay employees and to have to pay and who are subject to FICA taxes, and then also to have contractors who are then subject to FICA taxes. Okay. I got a question out there. Yep.
Okay, well, then I have a question. This is a real life situation that happened to me way back when, but I'm just curious if, well, it's too late now, but I'm just curious to see if they had taxes taken out. Way back in the flood of 93, I had to leave Des Moines to go to Omaha to work. And of course, while we was in Omaha, there was a hotel. So is that to my benefit or was that to the company's benefit?
Mostly that was probably to the company. Was it you were working for the same company? They just moved you out
Right.
to Omaha?
Right.
That
they
would
had
be, so
offices
that
in
should
Omaha.
not, yeah, that probably should not be taxable if they were doing that. That's for their convenience.
Okay, thanks.
All right. Also, so this is cash. We also have items that are non-cash. This would actually be cash value, should probably be under here. The fair market value of non-cash compensation. Some examples, gifts over certain amounts, and it's I can't remember what the threshold is. And they change it every year. I think your book talks about what that threshold is, but if it's over that amount, then it's considered to be earned income. Stock payments. So if you receive stock in the company, so like those incentive stock options. So the employer gives you some stock, you have to hold on to it for a certain period of time, but it's in exchange for your work. It's just a different type of compensation, right? Those stock payments, that is considered to be earned income, would be subject to FICA. Certain fringe benefits, not all fringe benefits, but certain fringe benefits are considered to be taxable. Personal use of a corporate car. So if you have a car that your company provides to you, but you're able to use it personally, go get the kids, go to the grocery store, go on vacation, that sort of thing. Any of that personal use would be considered compensation and would be subject to FICA taxes. There's a whole calculation involved in figuring out what the value of that is. Actually, there are a couple different ways that can be calculated. We won't go into the details on that right now. Employer-owned plane. Okay, so unless it's for business purposes, like you're going to a business meeting or something like that, if you're using it personally, then the value of that employer-owned plane, those flights, would be considered compensation as well, and would be subject to FICA taxes. You'll see when we get to Chapter 4, a lot of these same types of wages are taxable for income tax purposes also, as well as when we get to Chapter 5 for unemployment tax purposes. So you'll see a lot of repetition for, what do we consider taxable, what do we consider work for FICA purposes? It's going to be a lot the same as what we consider work for income tax purposes and for unemployment tax purposes. Let's see here. Tips, back to tips, everybody's favorite subject. So tips over $20 a month. I think it's 20 or is it 30? I think it's 32. I think they haven't updated this. Over $30 in a month is considered to be tax income, earned income, that is subject to FICA taxes. There are a couple of different ways that employers can calculate those tips. And I'm not going to go through again the details. I want to get more toward the calculations here. So that's why I'm kind of zooming through some of this stuff, but that's in your book. Okay. Specifically exempt wages. Wages that are not subject to FICA taxes. So those meals and lodging for the employer's convenience. So like what Lisa had described, the employer needs you to stay there. That value, that's not considered to be wages to you. Sick pay, now, they don't mean all sick pay. This is for any sick pay, usually it's in the form of disability type pay for that lasts for more than 6 months. Because essentially they figure if you are receiving pay for that period of time, now it's really no longer in exchange for work, right? It's been 6 months, you're getting it for some other purpose. It's not in exchange for work. Military pay, if there's a differential between what an individual who is in the military, they have a day job essentially, and usually we think of these as reservists. Somebody who has a separate job, but they're also in the military reserves. They go off for their weekend or their 2 weeks, but then they get called up to serve. If there is a difference between what they ordinarily would be paid and their military pay, and they are activated for more than 30 days, then that difference is not subject to FICA taxes. Any employer contributions to retirement plans, employer provided educational assistance up to certain limits, Job-related educational expenses, so what we mean there is essentially, so I'm a CPA, when I was a practicing CPA, my employer, I have continuing education requirements. I have to have like 40 hours of continuing education every year. When I was employed in the CPA practice, my employer paid for that education. That was not taxable to me. That's just part of keeping my credentials. Non-job related educational assistance up to $5,250 a year. Any amount over that are subject to FICA and income taxes.
5,000.
What's that? Oh, 5,250. Yep. And I think we talk about that in a little bit more detail in another section in the textbook. Okay. So now let's talk about calculations. Okay. We've got several different examples here because so we'll go through some examples of how to calculate for just FICA. We'll go through some examples of how to calculate for SICA. And then we've got to go through some examples as well for individuals who may be subject to both. Because you can have a day job and a side hustle, right? And maybe your side hustle is self-employed. You're self-employed for your side hustle. So these taxes, the tax base that we're going to talk about is per individual per year. So if that one individual has multiple jobs, whether they be through employment or through self-employment, all of that income has to be added together to figure out what the wage base is for them. Okay, so any questions so far? I know I kind of went through all that stuff fast.
I have one question.
Yeah.
Will that FICA and SICA apply if you are your own employee?
So yes, we're going to talk about that. It would be SICA tax.
SICA? Okay.
Well, it depends as well.
Yeah.
So
if you have like a company and you are the employee, not the employer.
So, and there are certain situations where so if you're self-employed, like you own your own business and you're the only employee, you are kind of both employee and employer, right? You act as both at the same time. That's when SICA tax would apply. If you are a partner in a partnership, so these are different types of business organization. If you are a partner in a partnership, you provide services to the partnership, you are not considered to be an employee of that partnership. You cannot be an employee of your own partnership. The partnership can have employees. So for example, you and I own a partnership together, 50-50, and Kathy is our accountant. She's not a partner. She doesn't own anything in the partnership, but she's an employee of the partnership. But you and I also provide services to the partnership. You and I would be subject to SICA taxes on our income from the partnership. Kathy would be subject to FICA taxes because she's only an employee. Now, there's a difference though. That's for a partnership or sole proprietorship. Corporations, if you are an owner of a corporation, whether it's an S corporation or a C corporation, those are different types of corporations based on their organizational styles. If you are an owner and work for a corporation, then you can be an employee. In that instance, you are an employee of that business and you would be subject to FICA taxes, not SICA taxes. So it depends upon how the business is organized, whether or not an owner in that business is going to be subject to FICA taxes or SICA taxes. But if they work for any of that money, it's not just a passive investment, then they are going to be subject to one or the other. Does that answer your question? Okay. All right. So other questions?
So which one get taxed more? Is it the SICA?
So it's the employee well, the worker, I should call him the worker. The worker is going to pay a higher tax rate with FICA taxes than they do if they were an employee paying FICA taxes. And you'll see why here when I go through these calculations. Okay. That good for now? Okay. Other questions before we get into the calculations? Okay. So we're going to talk about FICA first. So this is employees. Remember I said, so there's two different components to calculating tax. The base for the tax, how much is taxed and what exactly is taxed, and then the rate, the tax rate. You multiply those two together and then you get what the tax liability is. So there are certain taxes where there's like the tax base goes to infinity, from 0 up to infinity. Income taxes are like that. You are taxed on, the whole range of income. For the Social Security part of FICA taxes, however, it's only the first $147,000 that is subject to tax per year, per individual. So if you make $147,001, $147,000 of your income is going to be subject to Social Security tax, but that extra dollar is not going to be subject to Social Security tax. This is actually called a regressive tax. We're mostly familiar when we think about our income tax system, income tax, how it's set up is as a progressive tax system, which means essentially the more you earn, the more they take. The more you make, the more they take, right? So the income tax rate goes up as the base increases. Social Security tax is the opposite of that. The more you make, the less that rate is. So but there are only like two brackets. There's the first bracket up to 147,000, and then after that, any income over and above that amount is not subject to FICA, or not subject to Social Security tax. Only the Social Security tax portion. So remember, we've got two different types of taxes for FICA. We've got Social Security and we've got Medicare, right? So this wage base only applies to the Social Security part of that. Medicare does not have a wage base. Again, it's also from 0 up to infinity. Okay, so all income is going to be subject, all earned income is going to be subject to Medicare tax. Okay, so now these rates are this is for 2022. This wage base changes every year. I think in 2023, it's 150 something. So it goes up every year. It goes up for, inflation, essentially. Yeah.
So teacher, if I want to understand, so over 147, FICA tax 0. You're not supposed to worry for this one.
But only for the amount over 147. You do still have to pay FICA tax or the Social Security tax on the income that you earned from 0 to 147. But after that point, 0% tax rate. That doesn't seem very fair, does it? You're making that much money and you're not paying any tax on it, and yet, individuals who are making $10,000 have to pay the income on, or the tax on all of their income. There are those who want to eliminate this and make it subject to all income, up to infinity, to do away with this 147. The theory behind it is that because it's attached to benefits, to retirement benefits, and those retirement benefits only go up to a certain point. Like they only include a certain amount of income when calculating those retirement benefits. That the theory is, well, you're not, you're paying in more, but you're not getting anything back from it once you pass that point, right? You know, there are arguments both ways. Obviously, Social Security system well, they've been threatening that it's going to go bankrupt since I was a kid. Essentially, they keep threatening it. It's actually supposed to go bankrupt the year I would be receiving it, the year of my retirement. But I mean, obviously, they've been taking money from other places in order to pay these benefits. And so if they were to raise this wage base, either raise it up to, 400,000 or to infinity, obviously that would increase the amount of income in for Social Security. Now, the number of people who are actually making more than that is pretty small. And we're talking individuals, not households, right? So it's per individual, not per household, not per tax return. So the number of people who actually make that is fairly small, although the amount of income that is above that is large, right? And we've got this huge disparity in incomes. But Social Security, the tax rate, now again, this is for FICA, the tax rate for employees is 6.2%, up to $147,000, which means the maximum amount of tax that will be collected for any individual for Social Security taxes in any year is $9,114. We get that by taking 147 times 6.2. I'm assuming they did the math right. I'm not going to redo that. Now for Medicare, and see they've got the HI here. For the Medicare portion, the tax rate is 1.45% to the employee. No wage base, no maximum amount of tax. So that goes up to infinity. Now this is only for the employee's portion. Remember I said self-employed individuals are both the employee and the employer, and they have a higher tax rate. That's because this tax, both of these taxes, are shared equally by the employee and the employer. So the employee has a tax rate of 6.2% on their earned income up to $147,000. The employer has that same tax rate. So the employer is also paying 6.2% on all the income that they're paying employees up to that 147 per employee. So there are two parts to it. So let's see here. So we've got FICA here. And we've got, if we think of this as a chart, so let's do the employer, ER, employee, and total. We've got two different types of tax. We've got Social Security, and we've got Medicare, otherwise known as health insurance. Put theirs down. The employee pays 6.2%. The employer also pays 6.2%. Add those together, we get 12.4% total tax rate. Medicare, and again, this is up to 147,000. Hope everybody, yeah, they can see. Cool. Medicare, 1.45% paid by the employer, 1.45% paid by the employee, for a total of 2.9%. No limit here. So the total with both is 15.3%. So if somebody makes $100,000 a year, the employee is going to pay 7.65%. These percentages will you'll become familiar with them because you're going to use them a lot. So they would pay 7.65%, No, $7,650. Is that right? 7.65 of 100,000. I have that right? I'm having trouble with my decimals. This is also 7.65%. See these all? So, yes. Yeah, $7,650 is correct for both Social Security and Medicare tax. So if they have income of $100,000, the total amount of Social Security and Medicare tax that is being paid for that income, toward that income, is $15,300. 100,000, sorry, no, this is low, times 15.3% is $15,300. Half of it is being paid by the employee, half of it is being paid by the employer. So when you're an employee and you get your pay stub and you see how much has been taken out for FICA, keep in mind your employer has also paid that amount. So over and above your wages, your employer is also paying this tax. This is the reason why employers will make efforts to hire independent contractors instead of employees, is to save this 7.65%. Because as you'll see when we talk about FICA, the employer doesn't have any part in that. They only pay the wage or the payment. Okay, so these are the tax rates that for FICA. Questions about this? Yeah.
Yeah, so, so if the wage and the never over 147, you can take the wage multiply for 50.3, and then you can have FICA for together.
So if it's over 147, remember, we're only gonna, for the Social Security part, we're gonna stop calculating anything over that 147. But for the Medicare part, so now we're gonna have to do kind of two different calculations, right, to figure out how much taxes is owed. This up to the 147, this up to infinity. And we've got some problems that we can work on that go through that.
So in your previous example about you being a partnership, so your tax will be 15 or?
So the income that we earn will be taxed at this full amount.
Basically double.
Yes. Kathy will pay only half, but we'll have to pay the other half as the employer. Okay, so the same, you know, maybe I kind of worded it wrong when I said it's a different tax rate. I mean, it is a different tax rate, but essentially it's the same tax rate. It's just that when it's an employee, they share it with the employer. The employer is going to pick up half of the tab. Whereas with a self-employed individual, they're going to pay both. So I don't really even need to. So this is for total or FICA. For FICA though, the self-employed individual is paying this tax rate. We still have the same limits for self-employed, up to 147,000. No limit for the Medicare amount. Other questions? Okay, so we are going to do some calculations here. All right. Any questions out there in virtual land? Can you guys see? I don't know why this thing keeps moving. Here we go. Maybe it's trying to follow me. All righty. Okay, first example. I wish these were right next to each other. Okay, so, oh, that's not what I want. There we go. So Tamara earns $150,000 a year. Okay. We know she's over that 147, so we're going to have to do a little more advanced calculate, up to 147,000, easy, right? Easy. Once we get to 147,000 though, or if we have more than one job, because remember that limit is per individual per year. So if I earn $100,000 for the first 6 months of the year, wouldn't that be nice? And then the second half of the year, I switch to another job and I earn $100,000 a year. Well, now I've earned a total of $200,000 for the year, but I didn't reach that limit at any one employer, but I did reach that limit, right? So now there's some special calculations that'll have to be done as well.
Count that as different.
So the employer, the second employer has no idea what I made at the other with the other employer. So it's not their responsibility to keep track of that. So what will happen is the first employer would have withheld the full amount. The second employer also would have withheld the full amount. When I file my tax return, that's where I reconcile it and I'll get a refund of the amount that the overpayment that I made, right? But we've got, okay, so let's just say I didn't even get to, try and think of another example. Maybe I have 2 jobs. One job I made $100,000, and I think there are examples of this that we're going to go through. I'm an employee and I made $100,000, but I also have a side hustle and I made $75,000 as a self-employed individual with my side hustle. Well, now my employer is going to, my income earned as an employee is going to be subject to FICA. My income earned as a self-employed individual is going to be subject to FICA, but now 100,000 plus 75,000, I'm over that 147,000. So not all of my self-employment income is going to be subject to FICA tax. But I have to know that in order to calculate it properly. My employer doesn't have to know it. They won't have any responsibility. And if you're in a payroll department, you don't, because again, you can't know what other income employees are making, right? The only time you know is if in that one job they reach that 147,000 limit.
Can you clarify on that subject? If you, let's say, like the same example that you just said right now, but if you, even though you are a sole proprietor or LLC, would that be a difference if the company is making their own taxes and then you have your own income beside, like in another company? That will be separated, or that will become, at the time of taxes, become as one income?
Well, at the time that you file your taxes, that's when all of that Social Security tax that you've paid will be added up. And if it turns out that you paid Social Security tax on more than $147,000 of income, then you're going to get a refund for those amounts. Did that answer your question?
I was just saying, if separating the incomes, when you do your taxes, would that be one tax thing, or for the LLC or for the?
Okay, so the company itself is, theirs is good. Okay, so in your example, you own the LLC and your.
In my example, it's like just saying, I work at a certain place, at a company, and I get my, FICA taxes and whatever done there. But I do have a side hustle, like you said. And this is an LLC too.
Okay.
So at the time of doing taxes, will I separate those taxes as like being the LLC taxes and my personal income?
Yes.
Yes.
Well, but it will be, it depends on how the LLC is, well, you're organized as an LLC, but it depends upon if it's a sole proprietorship, because an LLC could be a sole proprietorship, it could be a partnership, it could be an S corporation. It could be any of those three. So depending upon which of those three it is, will determine how that LLC income and the FICA taxes are applied. So assuming it's a sole proprietorship, an LLC, then it is reported on the same tax return as your wages, but it gets a separate schedule. It's reported on a separate schedule, and those self-employment taxes are also calculated on a separate schedule. Does that answer that question? Okay. We get into that a lot more in income tax. So. Okay, so let's look at Tamara here. So Tamara earns $150,000 a year, paid semi-monthly, on the 15th and 30th. So they want us to determine Tamara's FICA for the December 30th payroll. This is a little complicated because Tamara, we know this, okay, so this is the last payroll of the year, and her income is, her annual income is over 147. So at some point during the year, she reaches that 147, but we don't know exactly when she reaches that 147. Did she already reach it on the December 15th payroll? Is she reaching it now on the December 30th payroll? We've got to do some calculations to determine that. And here's how we do it. So we take the annual gross salary, divide it by the number of payrolls per year. This is semi-monthly, so there are 24. So she gets $6,250 twice a month. We have to determine how many payrolls were run immediately before. So if there's 24, this is the last pay period of the year. There were 23 pay periods before, right? So up to the last pay period, she made $143,750 immediately before this last pay period. All right, so on the last pay period, she wasn't at that 147 yet. She reaches that in this pay period. So we have to determine now her income is, part of it is subject to Social Security tax, part of it is not subject to Social Security tax. All of it's going to be subject to Medicare tax. That part's easy. We're just going to take her, what she earned, the $62.50, and multiply it by our appropriate tax rate for Medicare tax. But like I said, some of this Social Security, or some of these wages are subject to Social Security tax, some of them are not. So look at the next slide to show you how that works. Okay, so how much is going to be taxed for Social Security? All right, so she had remaining, as of the last pay period, she had another $3,250 that would be taxed, that would be subject to Social Security tax. That's the amount in this pay period that is going to be subject to Social Security tax. So that's the only amount that we're going to multiply by 6.2% for the employee and for the employer, for each of them, the $3,250. Again, the Medicare tax, all of the $6,250 is going to be subject to Medicare tax. And I didn't mention this, OASDI. What the heck is OASDI? Like I said, there are lots of different acronyms for the same thing. OASDI, Old Age Survivors and Disability Insurance, is what that stands for. That's Social Security. Okay. OASDI equals Social Security. I think, you know what? Hold on just a second. I think, come back. I want to check and see if I've got posted. Yes, I do. Okay, so I've got some steps here for you to help you out. In course content, make that a little bit bigger, so those at home can follow along. I've got several things here. Little video there you can watch if you want. It's only 2 minutes long. Steps to calculate current period FICA taxes. That's what we're doing right now. So I got this broken down into 5 different steps. So calculate the prior period year-to-date salary up to the current pay, not including the current pay, which is what we did. It was 143,250, something like that. Calculate the OASDI wage base, 147, minus the prior period year-to-date, which is what they did in the previous slide. Am I going to be able to do this? Which is what they did here. So 7 monthly pay, how many were run before? 23 payrolls. And then wage base minus the prior period year to date. Get this back. If the result is 0 or negative, there is no OASDI tax during this pay period, because that means that we haven't, they've already exceeded the 147. They did it in the last pay period or some prior pay period. That means that there's no OAS, none of it is going to be subject to Social Security tax. And then skip to step 4. If the result is greater than 0, continue to step 3. So in our case, it was greater than 0, it was what, 3250. Multiply the OASDI tax rate by the smaller of the result in step 2 or the current period total wages, whichever is smaller. For current period total wages were 6250. The result in step 2 was 3250. So the smaller of those two is the 3250. That's what we're going to multiply then by the Social Security wage rate. And then here's the current period Medicare, just multiply by the tax rate and then add the results together. So this is, if you get stuck on one of these, if you follow these steps, you should be able to get to where you need to go. Okay? And I've got another calculation here as well. If you've got both FICA and FICA tax, which we're going to go through an example here on that as well. Okay. So in her case, so we did these steps, took the wage base minus the prior period total, 3250, that's the amount that is subject to Social Security tax because it's less than the full amount of pay for the pay period. 3250 times 6.2%. So her Social Security tax is $201.50 that she is going to pay. Her employer is also going to pay $201.50. If there was another pay period after this, then none of her future earnings in that calendar year would be subject to Social Security tax. When January 1 rolls around, however, we go back to 0. It's a new year. New year, new wage base. Starts all over again. Although this wage base is probably changed in the next year, right? It's probably increased. How much is it, the current period? Let me see if I can find it. 2023 Social Security wage base. 160, 200 for 2023. That's a big jump. It's because we had a lot of inflation. So that means that more income is going to be subject to Social Security tax, right? Bad for employees, good for Social Security. Bad for employers as well, because they're going to have to pay more. They have to pay more in tax as well, more in Social Security tax, because again, wage base times wage, or base times rate is tax. When either one of those goes up, tax revenues go up. All right. All right. Questions about this? So the FICA or the health insurance part, we're just going to multiply this by the full amount by the 1.45%. So the total amount of FICA tax that Tamara pays is the 201.50 plus 90.63, 292.13. Employer total is the same amount. Should we look at another example? All right. Sambit. $225,000 a year. So again, we know right away, we're over that 147. Paid monthly. Determine FICA for the November 30th payroll. So remember, we've got to figure out how much has been earned immediately before. So his last payroll would have been, if he's paid on the last day of the month, would have been the end of October, right? So October's the 10th month, he would have been paid 10 times. All right, so first thing we're gonna do is figure out on a monthly basis how much he makes. Divide that 225 by 12, 18,750 a month. How many payrolls were run before? 10. So he had made 187.5 as of the last pay period. So this pay period in November, how much of his income is going to be subject to Social Security tax? 0. Correct. He was already over, right? He was already there in October. He was probably there in September, right? So no Social Security tax is going to be applied in this pay period. Medicare tax, all of it, right? The whole 18,750 is going to be subject to Medicare tax. Questions? I know this keeps moving. Why? All right. So because there are no taxable wages for Social Security, but all of it is taxable for Medicare. All right, so the calculation then for how much will we tax him? It's okay, so they're including, okay, so there's another tax. I didn't think we had got to this point yet in the slides. There is what's called an additional Medicare tax. Okay, so we've got additional Medicare. Now, additional Medicare tax is not paid at all by the employer. Only the employee pays it. The tax rate, and be careful here, 0.9%, so less than 1%. But be careful when you're doing your calculations because it's really easy to call it 9% instead of 0.9%. Okay, so the total tax rate for additional Medicare is that's why I'm going to put a 0 in front of 0.9%. Now, this doesn't start until you reach income of $200,000. So instead of it being up to 147, it's over 200,000. Again, per individual, per year. Now, if you take my income tax class, you'll learn that the actual, if you are not single, there are different income limits for the additional Medicare tax. So it's another place where it's reconciled on the tax return. But again, employers don't know what your filing status is. They don't know if you're married. Well, they probably do know if you're married, but they don't know if you're married filing jointly or married filing separately, or, you know, they don't know any of that stuff. So they have to assume everybody is single. So again, additional Medicare, only paid by the employee, 0.9%, but only for amounts over 200,000. Okay, so we have this little bit of a wrinkle here with this particular pay period, because in the pay period before, he was not up to 200,000, was he? He was at 187.5. I get that right? I think so. Yeah, 187.5, so it was 10 pay periods. In this pay period, he reached 200,000. But the first, 12,500? 12,000, am I getting that right? Yeah, 12,500. No, I'm wrong. Sorry. So we've got to figure out how much of his income is subject to additional Medicare tax. The regular Medicare tax is easy. All of it's subject to regular Medicare tax, right? The 0.9%, we're going to take the, what are they doing here? Prior wages plus this month's pay. Okay, so the wages up to now, the current, through the current pay, instead of up to the current pay, through the current pay. So now he's made 206,250. How did they get that 206,250? I've run out of space here. So 187,500, which was up to October 31st. Let me see if I can, yeah, I do have to go up. Sorry, I have to make sure that these folks out here can see too. Okay, so 187,500 up to October 31st, and then he made 18,750 November 30th. We're going to add those two together. What's that? Is that
206.
602. So now he's made 206,250. He's over that 200,000, right? By $6,250. So in addition to all of that current pay period being subject to 1.45%, $6,250 is going to be subject to 0.9% as well. So it'd be 0.009 when you're doing the math. This calculator always disappears. So 6,250 times 0.009. Make sure there's 2 zeros in there. $56.25 for additional Medicare tax. And that's what they've got here. That's why we've got a different amount. So his total Medicare tax is going to be $328.13. We get that by calculating 18,750 times the 1.45% plus 0.9% times the 6,250. We got the 56 whatever, 5625, and then we'll add together the 5625 and the 271.88 to get 328.13. Now the employer is only going to pay this. They don't have to pay that additional Medicare tax. Questions?
So that over 200,000, that's for every employee.
Every individual, well, it applies from a payroll perspective, from the perspective of somebody working in the payroll department. Once an employee reaches $200,000 of income, that's going to kick in on everything over and above that $200,000. From the employee's perspective, how much they're subject to is going to depend on their filing status on their own individual tax return, but that's for the employee to worry about in calculating that. For our purposes, in calculating payroll, once they reach that 200,000, that kicks in. Yeah.
And that's by law, or is that by like?
That's by law. It's an additional, this additional Medicare tax was instituted as part of the Affordable Care Act. Obamacare. It was to help pay for those provisions. answer your question? Okay. Other questions? All right. I think, yes, this is a good place to stop, actually. So when we pick up on Thursday, look at that, we're going to go through calculation for self-employment tax. And then I think we've got an example as well for somebody who's an employee and they're self-employed, figuring out how much tax. All right, so again, there's a cute little video, 2-minute video up there if you want to. Where is it here? Yeah, feel free. My handiwork. Oh shoot, that's not what I want. Oh, right here. I see what I did. It's too big. So there's, you can follow those steps. There's some other videos here. Well, we haven't got to the 941 yet, but when we get to that, those might be helpful. But this as well, it's just kind of a little video on the FICA taxes and the wage base. Some stuff about Social Security, history of Social Security. So, to enhance your learning. That was free, no extra charge. All right, we're out. I've taken too much of your time. Sorry. Sorry if I made you late. So it's as far as, so there's, on their income tax return, that's where they, so when we get to chapter 4, we're gonna talk about the W-4 forms, where that they fill out, where they claim how much, they give information to the employer about how much they have. And that does play into the calculation. It can play into the calculation. But it's up to the employee to determine how much that is, how many dependents to claim, and whether they're even entitled to claim.
Because like when I give you the
Yep. In fact, you can't even give them advice on how to fill it out. Yeah. You just tell them, talk to a tax advisor. But yeah, it's completely up to them. You can't be held responsible. Yeah.
I don't know. I'm supposed to bring my daughter to hospital.
Okay.
For 10.
Okay.
I don't know if I want to come up for it because she has surgery. So I want to make online.
Sure. Yeah, that's fine.
Okay.
Absolutely. Not a problem. Yeah. Good luck. Oops. I need to stop recording.